Mr. Shakeel Ahmed, who's the CMD of Hind Copper and joins us on the show right now. Mr. Ahmed, thanks very much for taking up the time. Let's begin by understanding a few important developments at the company's end. You have bid for mines in Afghanistan. Indian companies are eyeing copper and gold deposits in that region. Give us details in terms of the total investments that's planned.
You see, the current press advertisement by government of Afghanistan is for 8 deposits essentially at 4 locations, 4 of copper and 4 of gold. Hindustan Copper, in consortium with other public sector undertakings, namely SAIL, NALCO and MECL, has submitted expression of interest for all of them.
Any update then on the FPO timing, because that's something that the market is watching out for very closely. You're planning to launch the FPO in this quarter. Have you discussed the pricing as yet?
The timing has to be finalized by Department of Disinvestment. Right now, timing has not been finalized. As soon as it is known to us, we'll share with you.
Couple of company-specific questions, Mr. Ahmed. Good morning, Neeraj here. Before we get down to copper prices and the impact thereof as well, but can you give us a quick update on the ECBs that you've planned? I mean, are you expecting to raise these funds as soon as in the current quarter itself?
Yes, the short answer to your question is yes. Our total project requirement is around $750–800 million spread over 5 years, and depending upon the progress of the project, we shall certainly consider ECB option, and first tranche we may consider in the first quarter of the current financial year.
Okay, the other update that I was wanting, Mr. Ahmed, is that the Madhya Pradesh SEB, I believe, has sent a notice to Hindustan Copper for some long-standing dues. What's the total quantum there, and how do you expect this to shape up? Would you need to shell out the funds in the current quarter again?
No, it is like this, that there is a dispute between Madhya Pradesh State Electricity Board and certain other mining companies, including Hindustan Copper, MOIL, about the definition of mineral. Our stand is that ore is different from enriched ore, because the ore is covered under Mining Act, and after processing the enriched ore is covered under Factories Act. So this dispute has been under litigation. We have lost at High Court level. We have preferred an appeal in Supreme Court. So we are waiting for a court judgment, and the matter is sub judice.
Okay, Mr. Ahmed, then let's talk about a few business equations, and especially in terms of what's happening with commodity prices. Economic data from China has caused concerns for base metal prices as consumption may come down. How serious are these concerns at this point?
You see, there are certainly headwinds from China due to slowing of growth, but simultaneously the demand, along with demand side, the supply side constraints in copper are also acute. So the balance between demand and supply remains quite robust, I should say, and the prices of copper have not gone beyond a certain benchmark. Currently they are ruling around $8,500–$1,600 and with rupee depreciation, I find that the prices are quite attractive as far as Hindustan Copper is concerned.
Right. Give us a sense then on the outlook of copper prices. Where do you see them ranged?
You see, our expectation in the short term is that the copper should be range bound between $8,000 and $9,000, and depending upon the state of Chinese economy, it may either cross 9,000 mark or go below 8,000. The expectation is that the worst in Chinese economy is over, in the sense that the slowing down is not as much as was being feared. So the copper prices in the last few days have rebounded based on data flow from China, and we expect that copper should remain buoyant between $8,000 and $9,000.
Just before we thank you, Mr. Ahmed, would you leave us with the guidance on the revenue growth expected in FY13, if possible even the bottom line growth?
You see, copper, one year is a long period to give a forecast on revenue. All that I can say is that if the current trend is persists, then our revenue growth should be 16 to 20% next year. That means current financial year.